What is up, guys? It's Rey-Jay back with another video. And in this one, I wanted to break down what's happening with SPY, Tesla, Nvda, and the overall markets. I'm going to break down some big earnings that just came out, not to mention some new developments going into tomorrow as we have big data in the morning. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Webull link. If you deposit any amounts of money, you're guaranteed 12 free stocks. If you deposit $500 or more, you're guaranteed 20. And deposit $2,000 or more, and you're guaranteed 40. The offer ends very soon tomorrow, so check it out before they run out. Anyways, now let's talk about the market. So far, we're actually seeing a bit of a sell-off on SPY and the Nasdaq as we're not getting the best of reactions after big tech earnings have come out so far. So that's what's leading to a bit of a sell-off so far. The question now remains, what's going to happen for tomorrow? Will this continue? That will depend on other factors. So I first want to talk about some data before I break down more details about these charts. So the first thing worth mentioning is the fact that when you look at the way the market was basically moving yesterday, we saw a nice pump at the end of the day because the market was very excited for the earnings that were coming out, like Google and the others. But today was the exact opposite. At the end of the day, the market started selling off because the market knew earnings may have not been that great. So since then, the market actually is seeing not bad earnings. Earnings are not too bad, but the reactions are not that great because of the potential increases in expenditures and other factors like that. And that's why the market is dipping a bit. So what happened today was electronic technology was down. Technological services were a little bit higher up. They were doing a better job at holding things up. But then the rest of the market was pretty mixed, especially like the consumer durables and the others. So very, very mixed market for today. But at the end of the day, we ended up seeing, the Nasdaq and SPY end up selling off. So now for earnings, just know this: today we have Microsoft, Meta, and Coinbase announcing earnings, and all of them are selling off at the time I'm recording this. Even though the numbers weren't too bad, we still are seeing some sellers stepping in. So I want to go over these earnings real quick, and I'll break down more details. So the first one is Microsoft. One thing worth mentioning is that this could pretty much give us a very, very interesting outlook, especially considering the fact that this is resembling like a buy the rumor, sell the news kind of event. So Microsoft's Q1 profits have beaten estimates so far, especially as their cloud computing has grown. But their spending is up to about $20 billion, a little bit more because of these new developments and investments. But despite that, their overall growth was not too bad. So their EPS was actually above expectations at $3.30. Revenue was at $65.59 billion above expectations. And operating income was once again above expectations. So not bad whatsoever from these notes. However, there were some concerns about how expenditures could end up continuing to go up. And really, I would say that investors didn't really see a lot of excitement as a result of that. And then also, I think that this earnings resembled a buy the rumor, sell the news kind of event because we saw Microsoft pushing quite a bit as we approach this earnings. So it's kind of like a buy the rumor, sell the news event. Now the share price is just selling off, and that's after these results just came out. For others, let's just go back over Meta. So Meta did relatively well. Okay, they beat on EPS and revenue. It was not bad whatsoever, but there is one thing that they're using to sell this thing off, and that's this right over here, that there is a risk of a significant acceleration in infrastructure expenses related to its AI build-out. So something else that's worth mentioning. But despite that, when you look at their actual numbers, EPS was a nice beat right over here at $6.03 above expectations. Revenue is also at about $40.59 billion above expectations. Not bad whatsoever. So they beat on EPS and revenue, but potential expenditures in the future led to a bit of a sell-off. So that's the result of what we're getting from Meta. I think the call is going on right now, so I'll have to see if this continues. But that's what's worth mentioning. Now for Coinbase, the share price is down about 3.6%. That's because of the fact that their overall profit and revenue ended up falling short of estimates. So net income was at $75.5 million after a loss of about $2.27 million and 1 cent per share. And once again, EPS and revenue are not as strong as what investors were expecting. So that's why we ended up seeing a bit of a dip. There was also some decreases in their services revenue, so not the best of news for them, especially during periods like this. So that's why we saw the share price down almost 4%. So just to show you guys the charts real quick, note a couple of things. Coinbase is currently down 4.31% in the after hours. It's selling off. Okay, Microsoft, we're going to double check this. We're down 3.66% right now. We're selling off after earnings have come out. And then there's Meta. Meta's also selling off a little bit. We're down about 3%. So big tech is selling off right now. This is going to drag the market down most likely for tomorrow. Now, despite this potentially adding to downwards pressure for the markets, there is one more factor that could change things just temporarily, and that's going to be the data coming out for tomorrow. So far, there are two factors. There's earnings and the data coming out tomorrow morning. The earnings factor is leading to downward pressure for the markets, but what about the data? Tomorrow is going to be Thursday, October 31st. It's going to be the last day of October and Halloween. But just know that 1 hour before the market opens, we have initial jobless claims, some employment numbers, but the main thing is going to be the PCE data. We're basically expecting everything to be almost the same. So core PCE month over month should be around 0.1 to 0.3%. A slight increase is still possible. Then over here, we have month over month for PCE. Basically, for September, we're expecting 0.1 to 0.2%, the same as before. Year over year is expected to be around 2.1%, a slight decrease for all items. And besides that, for core year over year, we're expecting the same numbers between 2.6 and 2.7%. So we have jobs numbers, not to mention the PCE inflationary data report. Just keep that in mind, guys, that PCE is going to be a big factor affecting us. But in my personal opinion, even if it causes a little bit of a pop in the markets if PCE data is decent, it might not be enough to cause the market to fly, because I think that the downward pressure from Microsoft and Meta may trump this. So even if we do get a small bounce, we could continue to fall despite that. I think that the bigger factor is earnings, and that's going to trump this. I also say this because when you look at the fear and greed index, there's less greed in the markets than before. We're actually getting closer to neutral now. On top of this, momentum is slowing down. We're slowly getting closer to our key supports, and we're getting a little bit closer to our 125 daily moving average. So it just goes to show the market is contracting just a bit. The put to call option ratio is on a bit of an uptrend. If this goes a little bit higher, this could signify there's a lot more shorts entering the market, which tends to slow things down. And then the VIX is starting to show some life. This could be bearish as well. So I just want to call that out, guys. So far, there is higher risk in the markets. So to clarify this, right now, earnings are dragging things down, so the odds do favor downside for tomorrow. We will see if we get a pop thanks to PCE data tomorrow morning and initial jobless claims, but the odds are still favoring some more downwards pressure. I want to make that very, very clear and be very, very blunt about that. So now let's talk about the charts, starting off with SPY. What is my view of SPY? What do I think is going to pan out? In all honesty, guys, we are looking a little bit more bearish right now. With PC data, we'll see if we get a pop or not, but the odds do favor us continuing to fall. We're looking at 578 as our support. It's about 577.5. If that fails us, we're going all the way down to 575. If we're bullish, you want to get back above 580 and then 580.8. My guts tells me tomorrow, we'll see what PCE data leads to. With this chart, whether we get a pop or not, it's going to favor a move all the way down to 577.5 or even below that. 575 is also possible if the market sells off more with earnings. So the odds are favoring downside right now, whether we pop first and then get the downside move or we just get a sell-off from here. Right now, charts look a little bit more bearish as we've gone a tech sell-off thus far. As far as ES goes, it's the same thing essentially. We're range bound, but you can see that ES is slowing down right over here. We have 58.50 is our resistance. We've got to reclaim that to turn back up. Otherwise, red risk is coming all the way down towards 58.20, all the way down to these lower supports, especially some balance here will take us down to 58.16. So right now, the odds are favoring the downside. If you look at Nvda, this is getting dragged down by big tech. We're failing to hold above our very, very key 50 EMA. So we need to hold above 138.5 to get back up to 140. If we can't hold this, we're favoring this move back down to 136.9, followed by the gap fill back down to the 135s. In my personal opinion, so make sure you watch 138 and 140 is our resistance area. In my opinion, though, I think the odds are favoring downside. I think that this is going to be tipping back down to 136.75, and eventually the 135s to fill the gap or below. So I favor downside for Nvda in my personal opinion. For Bitcoin, we made a high at 73,500, came down, made a lower high. So I think that this might sell off a little bit with the market and make its way back down towards 71,750. So it could be a little bit of a pop and drop like move for this as well. So watch and see if that ends up being the case. As far as Tesla goes, Tesla's on a bit of a sell-off right here. And I say that because we had a high up here. Now we're making a lower high. So I'm thinking that with this high up here, we came down. We're making lower highs again. In my video yesterday, I predicted Tesla would hit 262.5 to 265 in that range, then possibly get a rejection. And that's exactly what happened. We called out this pop and drop on Tesla. So what's going to happen is the same thing. We could try to push a little bit depending on PCE data, but the odds favor a test of 255 again. This is where we have this demand zone where there's some buyers trying to defend Tesla at the 255 area. If it does not hold that, I do see us coming all the way down to 252 or so, followed by 250 and then 244. So I do anticipate we're going to get very close to 250 most likely as we look a little bit more bearish in my opinion. For NQ, what we're selling off right now, we need to reclaim 20,500 to turn back up. Otherwise, the odds are favoring this imbalance fill and a move all the way down to about 20,375 or below. So I think the odds are favoring downside for NQ, so we'll just have to see how things end up progressing. For the QQQ, just know that we have this wedge and we're approaching our support right here, which is where our wedge happens to be. But nonetheless, we still remain more bearish. We still look more bearish looking at this chart. So just be very, very mindful of that as time goes on. So I think the odds do favor the Q trying to sell off a little bit more as we're not looking at the best of earnings. Earnings weren't that bad. There's just some concerns about expenditures and stuff like that. But there might be a risk of us selling off more. If 494 does not hold us, this is going to be coming back down to about 492, and then the 490 area is going to be coming next. If we manage to get back above 496, we could attempt for 498, but this is favoring downside for at least 494, and then potentially all the way down to lower levels such as this right here. We're going to be looking at this level right here around the 490 area and then 492. So 494, 492, and 490 are going to be some supports. I do anticipate some downside, so watch to see if that ends up being the case. But so far, that's very, very probable. For Aapl had a high here. It came down, made a lower high. It's actually dipping right now. It could try to push with PCE data, but I do think that we might fill this imbalance. So it might sell off just a little bit to about 228. So watch to see if you hold 230. If 230 fails, let's look for 228 as our target. And we have 232 as resistance. I think we might pop up and then start selling off to this imbalance. Then we'll see if we bounce or not, but that's what I'm looking out for as the most likely case. As far as Netflix goes, we had a very sideways day, very choppy. We're looking at 754 as our main level. If that does not hold, we're going to be dipping back down to about 748 and then 745. We also have resistance up here around the 758 area. My gut is telling me that we're going to be dipping back down towards 752 and 750. So we'll see if that ends up being the case. We have a double top leg structure. This is favoring downside for the 748 area. So watch to see if that ends up being the case. For CELH, we had a high here, came down, we had a lower high, came down, we had a lower high, came down, and we're downtrending because notice that the 50 EMA, the yellow line, is our resistance. We're really struggling to break through this. So this is favoring downside back down towards 30.4. For Palantir, it looks bearish. Obviously, it's selling off quite a bit. This is unfortunate, so I do anticipate some downside. It's been selling off more aggressively in the after hours, so I do believe we could be approaching 41.6 followed by the 40 area. So there could be more downside, at least for this moving forward. So just keep that in mind, guys. There is that risk of us potentially selling off. For others out there, we also have Supermicro selling off very, very hard because of the fact that it's facing a class action lawsuit, basically involving securities fraud and things like that. So very sad news. It's down. It was down 32%, and it's just selling off. I think we're going to get very, very close to 30 at this point, and we could even dip lower to where this imbalance is. 30.78, like 30.8, and then 30 are the targets. It looks more bearish, unfortunately. And there's no signs done yet, so I do anticipate that this might be dipping a little bit more. For Rivian, just like Tesla's kind of consolidating, might try to push up for 10.45 tomorrow since we have this wick forming, but then it could reject and then continue to dip back down to 10.2. So I think we're just range bound. Look for a little bit of a pop before it continues lower, and that's the most likely case for the time being. As far as SoFi goes, we had a nice top right here at around 12. We came down, made a lower high at 11.5, and there's a risk of us coming back down towards 10.89, eventually 10.5. So I favored downside on SoFi, a lower high to be made, followed by a dip to about 10.89. It might dip a little bit towards this support. We'll see if we bounce off that or not. So look for a little bit of downside tomorrow morning. For the Russell, just know that we had a high here. We came down. We're trying to hold 221. We're doing a good job so far. It's very resilient relative to the markets. So watch if 221 holds us. 221.36 is the main level. If this holds tomorrow, we could attempt to get back up to 222.5. If 221.36 breaks, we dump back down to 220. So I'm going to be watching to see if this holds. We're barely holding up so far. I do see that momentum is slowing down. So there is a risk of kind of popping and tipping down lower for 220. We'll see though. Maybe it depends on the market and other factors like this. Unfortunately for AMD, after earnings came out, this thing is still selling off because of the fact that their overall growth wouldn't be that strong for Q4. So this is favoring downside. We have this imbalance down here around 143. It may continue this sell off. We have a head and shoulders like structure. Looks bearish to me, and the odds are still favoring that downwards pressure. For others out there, we also happen to have ARM. ARM is looking a little bit more bearish. I anticipate it's going to be coming back down for 50.9 is my target. Unless we get back above 155, we favor 50.9 followed by 150.9, then 149.54. So this favors downside a little bit more. Coin is looking bearish. We need to reclaim 205. Otherwise, we're at risk of seeing 200, followed by closer to 192. So it looks a little bit more bearish, a little bit weak here. It's going to open in the red tomorrow. So just be mindful of that. Amazon was selling off with Microsoft. It's trying to fight at 190. It wants to hold 190, but we'll see if that holds. It could try to rebound off 190, then continue lower later on. So we could be looking to see a rebound attempt before it continues lower. So look at 190, 188 as our supports, and 192 is our resistance. Might pop a bit and start dipping lower as the most likely cases. So just keep that in mind. As far as Meta is going, we're down 3%. We're looking more bearish. We got to reclaim at least 580 and 584 to turn back up. I could try to rebound since it was holding its 200 EMA, but then it could start dipping lower for 565. There is still a risk of downside, guys, so just be very mindful about that involving Meta. Microsoft is more bearish. We're down 3.78%. We need to reclaim 420. Otherwise, there's a risk of it just kind of like popping and then dipping all the way down for 412 and 410. There is risk of 410 and 407 or so, so we'll look for more potential downside. For Google, we have 178 as a resistance. We could pop a bit and start dipping lower. And there is a risk of us coming all the way down towards 172. So 172 is at risk. We could be dipping down towards our 20 EMA. We'll see if that ends up being the case. So give this the time it needs. DJT looks more bearish right now. We're looking at 36.8 as our support. If it does not hold, we're looking for 33 as our next target. It's a little bit more bearish. I think it might rebound a bit before it continues lower. But so far, it is on a bit of a downtrend. So just be mindful of that. The VIX is looking more bullish, trying to break resistance around 20. If this breaks, we're looking for 21 as our potential target. The VIX looks more bullish to me because this could be favoring downside for the markets. So as of right now, the market looks more bearish. The VIX is favoring that upwards move. The 10-year is pushing upwards because of the election. I'm not going to get too political with that. And the dollar is trying to rebound here. If we get back above 104.2, this could be a bearish signal for the markets. The dollar has not been acting like normal, but I just want to say that there is still risk involved in it. So with that being said, the market's selling off, guys. I believe that the big tech earnings will have the bigger effect on how we end up trading for tomorrow. However, there's always that slight possibility we get a little bit of a pop thanks to PCE because the last inflationary numbers were not too bad. So even if we get that pop, it might not last, might just be a little pop and then we drop again. I think the bears have a bigger edge for the time being. So anticipate some downside for tomorrow, especially if you lose key supports on SPY, the QQQ, and the NASDAQ, and get ready for what the future holds. Always remember, guys, when it comes to earnings, okay, things don't always move as we anticipate. Things could look bullish, they could look bearish, but then the exact opposite could happen when you least expect it. That's why it's very important to always be ready for the unexpected. And when it comes to your trades, guys, you want to be very, very careful. I always say that I'm not giving financial advice. So for people who end up losing money, I'm not really one to blame. I will be wrong sometimes, but you can't solely just trade based off my predictions. You have to be very, very independent in a way where you're able to analyze charts and try to figure out if you should exit a position or not. That's why you must always remember to manage risks, not financial advice when I say this, manage risks, have stop losses, and do not go all in on your trades. You must do that. Otherwise, you are at risk of losing loads of money. Okay, so I'm trying to be very blunt about that. And I always try to give you guys both sides of the coin. I tell you guys about the bullish and bearish cases levels to watch for. And then I tell you what I favor just to be as open as possible. So you want to work on that independence, be able to analyze the levels. I give you guys everything for free. So you guys could use all this data to assist you in your daily trades. And I just hope for the best for everyone. So good luck, guys, with your trades. Manage risks. Do not get too emotional. And remember, guys, there's only so much that I could do. I cannot nitpick and constantly just look at every single one of your trades on a daily basis. I'm just here to provide assistance for free on the sidelines. All right. So I hope that's as clear as possible. I thank you all so much for listening. Please have an absolutely incredible rest of your day. Enjoy your day, night, or evening, wherever you guys are around the world. And I'll be back tomorrow for another update to break down what's happening with the PCE data. So I'll see you guys tomorrow before the market opens. Until then, have a great day and peace out.